Jillian, thank you so much again for joining me today. Let's start with an overview of your role and your background.
Thanks for having me. First of all, it's really nice to be here. I'm Jillian Slyfield, Chief Innovation Officer for Aon. And my role at Aon is to look after investments that we make as a firm that have a timeline that might be 3 years, 5 years, sometimes even longer. I think what we've recognized as an organization is that innovation comes in many forms. And as an organization, we're very innovative. And most of that innovation comes from the field. In fact, I would say almost all of it does. Comes from our solution lines, it comes from our geographies. And we also recognize that innovation can be evolution, meaning we're taking some things that we do and making them just a little bit better all the time. And sometimes there's things we just can't do side of our desk. There's things that we need to make that extra effort for. And those are the things that largely come to myself and my team. But I also participate in the things that are focused on solution line and geography. So I know we'll talk about some of those today, even though they may not be completely under my banner as Chief Innovation Officer. It's something as a firm that we're very collaborative on and contribute to organizationally.
So obviously, very big role in a very large organization. I believe Aon, well, it's probably the second largest global broker, over 50,000 employees. You've already touched on this, but like where you said a lot of innovation comes from the field. I'm sure it kind of has from an executive committee, there's also other priorities. Have you got any defined process by which you capture some of those ideas, or like how do you identify where to focus on?
Yeah, oh, that's a great question. I think I've had the advantage of sitting in a lot of the seats that our colleagues sit in. So I've been an underwriter, I've been a producer, I've led those teams. I've been a sales leader, I've been an underwriting manager. I led a practice group, formed and led a practice group for Aon. And those experiences, I think, have really taught me that those great ideas are largely not going to come from our senior executives. They're going to come from our clients, and they're either going to come directly from our clients or they're going to come from our colleagues who are listening to our clients. So let me talk to you a little bit about the way we think about it, which is we want to be in response to client need. And so our thought is our clients have ever increasing expectations around what we do because they're constantly changing, right? So they've got changing business models, they've got a change in technology that they're either creating or responding to. There's different social expectations that are impacting them. There might be regulation that's impacting them. And so we've got to really keep a pulse on what our clients are asking for. And we can do that through very formal ways. And we do, whether it's focus groups, specific conversations with key clients, things like that. But largely it bubbles up from our colleagues who are in conversation with our clients that are saying, there's a need to address this particular risk issue, or we see something happening in a part of the market that we need to respond to. And we listen to those as an executive team and start to pull our colleagues together and have those conversations. Those could be, industry leaders that hear from our colleagues who are part of the tech industry, as an example, or the construction industry, and really learning from what they do. So it all kind of bubbles up, from the old coming up. The other piece of it, honestly, is you be able to put your finger on some of the issues that we work on just as quickly as I could if you sat down and read the news over the course of a day. You say, like, what are the headline issues? Well, climate risk is a headline issue. Great, that's something that we were addressing at Aon. Artificial intelligence is a headline issue. That's something that we're addressing at Aon, right? So if you're looking at like what are these macroeconomic trends that are impacting our clients, where our industry, not just Aon, but like our industry isn't keeping up with product solutions, distribution channels, et cetera, to serve these new risk issues that are facing our clients, that's what we want to talk about. And then, of course, there's a process for evaluating that, meaning it might be an interesting idea, but it also has to be something that it adds an incredible amount of value for our clients and candidly for enough of our clients, right? It's usually not one client, although we hope to solve for that. But on our team, we're looking for things that are, again, kind of those macroeconomic trends where we can create something that impacts a number of clients across, global geographies and across the firm.
Yeah. So I'm sure then if you span your focus across many different areas, many kind of, you've mentioned a few of them, but like if you had to pick, like, what are the 3 or kind of key areas of strategic focus from an innovation perspective, like themes, perhaps we could call them themes. What would those be?
Yeah, well, maybe I'll start with something else if I can, because I was just thinking as you're saying that, to be clear, innovation from my perspective, it could be a lot of different things, right? Like it could be, do we need to innovate on policy, meaning do we need to innovate on coverage? Does a client need something that has previously been uncovered or not covered properly historically? Is it, are we innovating on the way we're servicing business or a distribution channel? We need to think about that. Is it a short-term need or a longer team need on the behalf of the client? And the only reason I say that before I answer your question is I think for us, innovation is going to look like a lot of different things. Innovation isn't always like, here's a new insurance policy for you, but it might be, here's how we're delivering service to you differently today than we did before. And it adds more value to you as our client. So when I say that, I would say it's a lot of different priorities at AM, but I think the 3 that would be, I think, interesting maybe for this audience is, kind of data and analytics, absolutely. Maybe number 2 might be future mobility. And 3 would be kind of digitizing facilities and kind of how we're creating new marketplaces in our company. And they really represent different parts of our innovation journey as a firm.
Okay, so perhaps it would be very interesting to perhaps deep dive into each of those, which are broad themes. Yeah, perhaps. So let's start with the first one, data and analytics. Like, what are the type of challenges or pain points you've identified or you want to address, and how are you thinking about how data and analytics can solve them?
Yeah, well, so I always have thought it's interesting as an industry, we probably have as much, if not more, data at our fingertips than almost any other industry globally. However, I think historically we haven't done a great job of doing something with that data beyond broking an individual policy. Meaning, if our client gives us information about their policy or we have claims data, what are we doing with that data that actually can provide insights back to our client that enables a better business outcome for them? And there's a lot of reasons for that, right? There's, the data that we are getting comes in so many different forms. It's complicated. It comes in different forms from different places. Some of it we are able to utilize, some for privacy reasons we're not able to aggregate and utilize. As you and I have discussed previously in other conversations, we're kind of an industry of aggregators, right? There's a lot of acquisitions, there's a lot of growth in our industry. And so you end up with data pools. If I think of us as a broker, we have data pools that are historically challenging to use. And candidly, I'm not sure that our technology, even if you go back 5 years ago, the technology available to us didn't support creating better insights for clients. But I will say at the same time, our clients are asking more, like placing the policy and even doing an excellent job at that it's just not enough, right? They want greater insights to help them drive their business forward. They're seeing more volatility in their risk. There's more complexity in their risk. There isn't a client that doesn't have a global impact anymore, right? Maybe 20 years ago there was, but today, whether they actually have a footprint globally or not, they are impacted by global spheres. Is all of a sudden the expectation of us is much higher to come to the table with tools and resources that help our clients make better decisions about their program, not just in the moment, certainly at the renewal, but the other 364 days a year as well. And so they're looking for those decision support tools. So I think there's a whole conversation around, and you see it from other brokers, not just Aon, but other brokers as well as other carriers saying clients are asking for more. And we're now able, because technology is allowing us to come to the table with greater tools. I think sometimes too, their risk issues are changing with our clients. So, some of them that I had mentioned before, whether it's AI, climate risk, but certainly cyber risk, doesn't have to be on the risk capital side of the business, could be on the human capital, meaning like the talent profile of our client companies has changed. And so as a result, our clients are looking for us to help them adjust, evolve, accelerate their growth, not just protect what they had before. So that's where some of this has come from for us.
That is very interesting, because I was talking to a senior executive at a very large global technology company who's in charge for the risk manager, so placing risk and interacting with brokers to get the right policy or right international program policies for them. And she was mentioning that that she couldn't understand why either the broker or the insurer couldn't help her. One is understand the risk. Second is what is the view of the broker and the insurer on that risk that makes the premium go up and down or be more expensive or less expensive. Almost give the client the tools to understand what is in their hands to be able to be a better risk, which ultimately is in the best interest for everybody. And generally, what she was saying is she couldn't understand why that is not the case. And you've mentioned privacy and regulatory. That's obviously part of it. But like, what's your answer
It's not
to
the
that?
biggest piece. Yeah. Well, I think there's a couple things. I don't think there used to be an expectation that was something that we offered to clients. The expectation used to be that we could place an insurance policy for a price that the client agreed was valuable, and off you go. And then clients started asking more questions about it, right? They said, well, how do I become a preferred risk to this carrier? Right? How do I know how I stack up against other clients? They're looking for information in return. They want more control over it. I think that's kind of goes back to what I was saying before, is like our clients are elevating their ask of us in this. Like, how do I become a better risk? How am I evaluating this? And it used to be like carriers were the black box. We give them data, they do whatever they do over there, and then they come back with a number, right? And a structure. But that is the old days. That's an unacceptable outcome for all of us. There's so much more transparency in the process, so much more. And I know we'll talk more about data and analytics, but more data and analytics that we can bring to the table so that clients have better tools, and frankly, that clients can represent their own risk more favorably, or candidly, if they have risk issues that need to be addressed, they know what they are, and they can start to say like, oh, okay, maybe I'm not, the top risk in this category this year, but I know what it takes now in order to do that. So it's, like I said, it goes so far beyond that renewal information and more about what can we provide. And I'll share a brief story with you because it's in the back of my mind. I was in my office yesterday and we were working on a large account, and it's, one of the major, I would say it's a Fortune 50 company. So they have, a huge risk profile. And we had an internal meeting about it. And one of the things that one of my colleagues said was, our client has historically not been willing to give us the data around a specific risk. And so we would need that data in order to provide them, this data and analytics response that they want. So they want these insights, but in order to get the insights, we need the data. Historically, they haven't been willing to give us the data. And I said, well, I think we need to think about it differently, because I hear this often from clients. Do I need to give up this data? This is my, I'm a big company. This is part of my IP. I don't want to give this up. The only reason they don't want to give it up is because they're not getting something strong enough in return. So if there's enough value on the other side, they would give us the data in a heartbeat if what we could give them back in return was something that they valued. I think what's happened with clients is there's times when they either hold back data or they limit what we get on either the broker side and to the carrier then, because what they get back from us isn't enough, right? And so I think we've got to up our game. And in this case, I think, now stay tuned. If you ask me again in 2 weeks after I talk to the client, I'll have the better answer. But I think now we actually do have something that's of value to clients, like as an industry, and certainly at Aon, I think now I can go to them in a way I couldn't 3 years ago and say, if you give me this data set, I can in return give you analytics that you will find valuable, that help you drive your business, drive growth, reduce your risk, etc. So it's a trade-off.
And if you think about because this is almost like a split responsibility between insurers and brokers, right? Because I guess part of the insights the client is asking for probably needs to be provided by the insurer, and part of it could be provided by the broker. So from the insurer, did you think about like what are the rating factors? So like what does have an impact on the premium. And there are things obviously outside of the control of the client, but things inside of the control of the client. Always a great example would be things like in cyber, that there are risk controls, so technical risk controls that the client can put in place that will make the premium be lower than if they don't have them, right? So do they, well, the obvious ones, like do you have multi-factor authentication for remote access? That is a typical risk control that a cyber insurer will price the risk differently depending whether that control is in place or not. So I think there's some responsibility for the insurers to be able to not just provide a premium back, but say, this is a premium, but if you act on these 10 risk controls or you put these mitigating factors, you would get a different type of policy or a different type of premium.
Oh, well, part of what I was thinking as you were saying that is it's also helping carriers. And I think carriers are well on their way to this conversation, but companies are evolving so quickly right now. They are adapting to new technology. No matter what industry you're in, you're adapting to new technologies. I think their risk profile is changing faster than it was before. And so one of the things we talk to carriers about is, and this is my language, not necessarily Aon's language, but the way I think about it is like, what's the difference between long data, which is, data that we can look at over 10 years or 20 years, and we can say, okay, here's a pattern that we want to respond to, which is largely how underwriters have historically underwritten. And then I also think about like deep data, which is we now have more data around every point a transaction than we've ever had before. So are there underwriting insights that we can glean from the last 6 months, as an example, but we have 100 data points instead of 3 data points over 10 years? Now, I don't think one is more valuable than the other, but I think in this era of change and complexity and like I said, technological impact on our clients, you got to look at both, right? We can't take like you just use cyber as an example. Do I actually think that a 10-year horizon on cyber risk for our clients or their claim profile over 10 years is valuable to a carrier? I mean, would 10 years ago, 2014, is that valuable for you to look at? Probably not. It's the company would have evolved so much since then. We've really got to like put much more emphasis on what can we learn? What can we help our clients learn? How can we collaborate together to create a better risk profile today, over the next 6 months, over the next year, rather than like, what did it look like 5 years ago?
Yeah, and then just to give an example, what was the type of insights do you think Aon could manufacture for the clients?
So we let's see, trying to think of what year. I guess we just started bringing them out at the end of last year and then now this year. So we've started a suite of what we call our analyzers. They will eventually all funnel up to one marketplace that clients will have access to, as well as us at Aon, our colleagues. But today, we have individual analyzers, and they're property analyzer, casualty analyzer, D&O, cyber. That's on the risk side of the business. We also have a health analyzer. But let's just talk about the analyzers for a minute. The risk, we take the loss information, exposure information, all the things that you would normally see at a renewal, and we model the risk to create kind of multiple loss forecasts for our clients. Then we look at it and we say, okay, what are the coverage options that might be coming to the table that we're seeing carriers come to? We put those into the system, and then we can see where the overlap is so that clients have a better view of which option is going to create a better financial outcome for me, given the loss information that we have. The next kind of version of that, so today, it's exactly as I said. The next version of that, which will be out in the next couple of months, so we're constantly evolving these analyzers, is instead of kind of taking that look back, it's taking the look back, but it's also using predictive analytics and artificial intelligence, some AI modeling, so that we can say, given all of this deep data, given what we know today, maybe we don't put as much emphasis on that 10-year-old cyber data, and we start to think about what is our client doing today, and what are we actually predicting might happen, given what we know in the space over the next year. Gives our clients more information around, like, how do I want to protect it? First of all, do I want to protect this risk? And if so, how do I want to protect the risk? And what does that structure look like?
And it helps them, is part of the goal to help them evaluate and compare different policies or terms from different carriers. Is that part of the goal of those analyzers?
The goal's a couple different things. Yes, so first of all, it's so that they understand their own risk. Because remember, they still have the same pool of data that we have. So they need to be able to interpret and understand this kind of data set that they have. So you can say, are we getting better? Are there areas for improvement? What does that look like? What's changing? So kind of step one is let's understand my data set. Step two is what is the response of the marketplace to that data set? And then what is the best financial, given the information that we have today, what is the best financial match from a structure, premium, et cetera, from a carrier to this? So it goes so much further than what we used to do with kind of actuarial modeling. It's that plus. The other piece that it does, and I think you brought this up, just hinted to it, which is carriers are interested in this too. So, can we provide a better picture to carriers so that they have more information around how they, do they want to underwrite the risk? If so, what could that look like? What are the attachment points? How do they want to price it? If we can give them more confidence in their underwriting process, we believe that'll create a more efficient system or even bring more capacity to a place that may not have full capacity today.
And then going back, one of the points you made earlier was about the challenge of just the availability of the data. And you touched also earlier on the kind of the challenges that the consolidation in the market brings. How big of a problem is that? So like, is the quality of the data actually hindering your ability to provide this type of insights faster?
So I would say at Aon, if you asked me this even 3 years ago, I would tell you that that was one of our most significant problems and our challenge. It's a challenge. It wasn't really a problem. It's just a challenge. We're getting data, but what do we do with it? I mean, and remember, a lot of this data comes to us, at least today, it comes to us in an email. So submissions come in an email. Like there's a lot of transition through emails. I don't think that'll be true in a couple of years, by the way, but it is true today. And so how do we take that data, which might come in an Excel spreadsheet, it might come in a PDF, put it into a format that we can utilize both for this client, but also that we can aggregate it in a way that we can create some of these insights and supported where we need to with synthetic data. So back to your question, if you were to ask me 3 years ago, I would have said, even if we had the best technology on the planet, we need to get the data organized. One of the commitments that we've made at Aon, and I know that carriers are doing this, other brokers are doing this too, is we have worked on older architecture for many, many years. And we made a commitment. It was part of our first quarter earnings call that we were investing $1 billion in both our infrastructure at Aon as well as kind of evolving the way that we organize and manage our data. And then again, kind of next into tools. So kind of all three of those things need to happen. So we're well on our way for that. But I would say there's still quite a bit of room for improvement. But we can now create, the analyzers wouldn't have been possible, truly, 2.5, 3 years ago. Now they're possible with great data for our clients, and we'll get even better as we continue to get better.
That is fantastic news. I mean, probably, as you said, 3-5 years ago, nobody would have believed that you could make progress and really and use the data to provide value. Sorry, it probably sounds a bit harsh, but like 5 years ago, it was probably technically challenging to leverage all the data to provide better insights to clients. And it's fantastic to hear that you are getting there, very close to get there.
Yeah. Well, and technology has changed, right? Like there's character recognition technology and other technology where we can pull data, like I shared before, out of emails and into other platforms where it can be utilized rather than having a person rekey it and things like that. So, the technology available, not just ours, but just the technology available to us in the marketplace is so much further advanced that I think it's a good time for this.
So let's move on perhaps onto the second area that you mentioned. You mentioned about future of mobility. So probably let's start with just
This is
an overview of, like, I mean, again, it's a huge topic. Like, what do you see? What are the main drivers of challenges in that space, and how are you thinking about it?
So we started an area of investment around solutions for mobility clients because there's been so much advanced technology and change in this space and social change. So I'll give you an example. And before I give the example, I'll say this, and that change gives us much more options as people who are using different types of mobility, whether it's autonomous vehicles, electric vehicles, et cetera. But there's a lot of risk issues coming out of it as well that are not being addressed as well as we'd like them to. So when we think about mobility, if you were to go to any large fleet owner or fleet manager, you would hear that they have rising automotive costs, auto liability costs every year. Um, it's uncontrolled and they don't know how to control it. And the information that they do get around kind of the status of where they're at, if they're very aggressive, they're very large and very aggressively managing it, they kind of know where they're at month by month. But I can almost guarantee you at the end of the year when they have carriers that come in and talk to them about their renewal, they're getting huge increases, 20%, 40%, sometimes doubling. And they're thinking, oh my gosh, I don't know how to control this. And it's starting to drive my business instead of enable my business. So out of control costs. Flip that. Why are carriers giving these huge increases? Well, they're giving huge increases because cost of claims are going up. So more frequency, more severity, claims are out of control, and we're using vehicles differently than we did before. So all of a sudden you have this conflagration of different modalities, right? Whether, we talked about kind of autonomous vehicles, electric vehicles, it could be scooters. You have different kinds of drivers. So it used to always be a human driver. I live in San Francisco. There's autonomous vehicles, no driver, no safety driver driving around. So that's new for us. And then, of course, you have the insurance piece, which is, as my colleague who runs the future mobility team says, he's like, it's mandatory for cars everywhere in the world except for New Hampshire and Egypt. So you have these three pieces that need to come together to be successful. And frankly, it's not working. As an industry, it's not working. So I went to a large kind of entertainment client recently, global company, and I said, if we could solve one risk issue for you, what would it be? Like if I could just grab one thing, you put it on my plate, I'll come back and fix it for you. What would it be? And they said fleet. It shocked me, actually, this company, because I think of them as entertainment. They have so many, their reach is far, so many different risk issues, but the one that came up for them was fleet. And again, it's because there's not enough information to enable the business. So we took it on.
So, but I assume, for example, that I obviously don't know who that client is, but entertainment client, I assume their fleet is probably not, it's still driven by humans with probably traditional vehicles. So why in that type of risks is frequency and severity going up?
People are driving faster than they used to drive before. So when it's a human-driven car, people are driving faster than they were before, meaning even 5 years ago, you will find that speed is increasing. The other one that might surprise you. The one that won't surprise you is distracted driving is a major impetus. People are tired, people are on their phones, and that is not exclusive to you or me when we're driving in our car and running around and getting our groceries and things. That's in the workplace as well. And then there's new forms of vehicles and it changes the liability picture. So if you think of rideshare, which if we go back, 10 years or so, we would have thought of it as maybe more of a novelty. And now I think we all depend on it. You get out, off an airplane at the airport, and what's the first thing we do? We get our ride share and off we go. You don't even think twice about it. But in that, there's a whole different liability picture around who's responsible for a loss and when, and then what is the impact of that on insurance. And so not just rideshare, but all these different forms create a different risk profile than we were ever used to covering before.
So I'm sure there's not a single solution, right? But if you had to think like, what are some of the potential solution? Is it new insurance products? Is it, we've been talking about telematics for probably 15, 20 years, and it has not really picked up. Is it telematics? What is it?
So I think you're right. It's not going to be a one size fits all. And even for like a large fleet owner or operator, I think there's things that they can do, but it's going to be multiple things that solve for it. One of the things that we've done at Aon from an innovation perspective is we bought a data and analytics company earlier this year. And so we've rebranded them as Fleet Risk Intelligence. And the goal of that, to your point about the telematics data, one of the challenges with telematics data is that it's a data set, but it's not insights. So, like, great. I know that Juan is a hard breaker, so he's hitting his brakes a lot. But, like, is that a problem? Or is it not a problem? Like, what's happening? Well, if you live in New York and you're in Manhattan all the time, you're going to hit your brakes a lot. That's true. Now, if you're in Wyoming and you're hitting your brakes regularly, well, maybe that is a problem, right? So the telematics data in and of itself hasn't been put together in a way that's useful to our clients so that they can actually make either in the moment or weekly decisions about driver selection, driving behavior, how can they enable their business better with a tool? And so one of the things that we did was acquire a company which we now call Fleet Risk Analytics, and it takes the telematics data. So whether that if you already have a dongle or it can be from your phone, because you can pull telematics data from a phone, all connected cars, of course, have it. So it streams in, and we create risk management insights from that data set. And so any of our auto clients have access to this if they're in the UK or US, and they can now see a picture of whether it's as specific as the way Jillian drives or the way Juan drives, or as general as, hey, all of your drivers who are driving after 9 p.m. are having a specific, here's thematically what we're seeing, and here's some ways that you can help solve for that. So we do want to segment kind of the driver selection, but we also want to say in aggregate, here are some things you can do as an organization to change the outcome of the drivers, the life
Exactly.
cycle, the claims profile.
Yeah, really what you're doing is going from behaviors that clients didn't, well, probably couldn't act on, things like you said, you mentioned speed, the average speed increasing, distracted driving. Obviously, for that entertainment company you were talking about, probably they were not aware of that, right? So you get, but with telematics and all the data, you're bringing that into insights, converting that into insight that you can play back to the. So it almost goes back to the first topic we discussed. It's like, how do you play back those insights to the clients and say, hey, these are the factors that are driving that 20-40% increase in your premium. But this is what you can do about it, right?
Right. And I think, what's interesting for this particular, so we talked about the analyzers earlier, and we will typically work with one of the analyzers in preparation for a renewal. With Fleet Risk Analytics, it's a business enablement tool that we give to clients that they can access constantly throughout the year. So they can access it daily. It becomes a dashboard for them. So the goal is you don't get to that renewal and have a surprise, or you don't get to that renewal and say, I have a surprise. Now here's the actions I'm going to take. It's, oh, month one, this is good. I want to make it even better. So I'm going to keep doing what I started doing. Or month two, it pivoted. Now I have like specific actionable insights. I can my operations. And I'm in month two. I'm not in month 10 where, the year is already set.
And how do you match that? Because obviously, as a broker, you can provide those insights, to your point, those insights throughout the year to your clients to give visibility so that they're not surprised at the renewal time. But ultimately, the premium is going to be defined by the carrier. So do you actually need to work with
That's right.
do you actually need to work with the carrier to make sure that the insights and recommendations you're providing actually correlate or have an impact on the actual premium? Or how do you do that?
Absolutely. Absolutely. So, two things with that. If everything goes according to plan, of course, it always doesn't, but if it did, and it usually does when we have a client that's using Fleet Risk Insights consistently, then the claims should to some degree speak for themselves, meaning the risk should be controlled and you should see that control reflected in results. Having said that, any one of my clients will tell you the same thing, which is the storytelling is incredibly important, right? There's a reason we don't just kind of package data up in a circle and throw it into a math machine and it comes out and says, here's your premium, because our underwriters are looking for context and they're looking for us to say there is, a culture of risk management. Here's the actions that I'm taking. This is how we're delivering results. They want to know that great behavior that they saw was a plan and not just like it might have happened once, can it happen again? And how are we going to continue to make this risk better and better? So yes. So number one, it's part of the storytelling. It's part of sitting down together, carrier, client, broker at the beginning of the year and creating this plan and understanding fleet risk intelligence. It's having mid-year meetings and keeping everyone in this, aligned on that same message. And absolutely end of the year, it's creating, there's actually deliverables that we can give to carriers so that they can see some of the actions that the client has been making as a result of using the tool. So the goal is to make this something that's incremental over time. And at the end of the year, it's just like, oh, we know exactly what's going to happen. And
Yeah.
and frankly, even if the result isn't exact client wants, and sometimes that's true, it's not a surprise. I think, every client wants a great outcome, but if they're not going to get a great outcome, they want to know that as soon as humanly possible.
Yeah.
And so giving some line of sight to what's happening is hugely impactful for our clients.
Makes absolute sense. Okay, I want to make sure we've got time for the, you mentioned the third area or theme of innovation, which was about digitization and AI. Again, very broad topic. So like how would you describe that third theme?
Yeah, this one is big, right? And part of what we've already been talking about, this all fits together. And I would say, and you have a background at Hiscox, so you know this too. Digital transformation and it's kind of fit with artificial intelligence is something that's coming up for a lot of carriers. I think all of the major brokers are starting to address it. At Aon, this is something where, as in most major innovations that we have, we're going to start small. We have started small, and then scale out from where we've begun. So I'll kind of talk about what that looks like. And it's always for us, this doesn't sit on my team. These are collaborations between our risk capital teams, our Aon Business Services, which is, the kind of our operations and technology folks, and then our global region. So everybody's got to be in on this. But essentially, what we hear from brokers, carriers, clients is in the broking process, right? Everything from submission all the way to claims, like that entire journey, everyone's asking for the same thing. And when I say everyone, I mean the carriers, our clients, and our brokers are asking for simplification. It's complicated. We're constantly filling out different forms. One's an Excel spreadsheet, another might be a paper form. I actually learned we have one of our offices has a fax machine because they receive some of these things like an old-fashioned fax. I was like, I didn't even know anybody had those anymore. But we've got some of these antiquated processes for gathering information. So simplification, more clarity around what's needed and why, what are the outcomes for the data that we get and then return insights to our clients, as well as what our carriers are asking for. They're asking for like more confidence in it. Like if you're telling me this is a great outcome, like how did you get there? What does this mean? There's a lot of questions about that. And so one of the things that we're building is a digital marketplace so that there's a kind of four horizons, if you will. But in the final horizon, there will be a digital marketplace, part of which creates kind of an alternative to traditional wholesale arrangements, but one in which we can conduct business on, in some cases, almost instantly, meaning in less than a couple of minutes, in its ultimate form, to take away from some of the processes that we have today that are just administrative and labor intensive, rather than true knowledge work where we want to spend our time. So we want our colleagues and our clients are in return focusing on things where it's relationship oriented, knowledge work oriented, back to the insights, not into the data collection and processing. Let's get that as clean as we can. And it isn't like that today. It's beginning.
Yeah, so
It's the beginning of a growth.
I would love to hear about the first three horizons to get there, but like just so that concept of a marketplace, is that like without getting too technical, but is that like a API integrated marketplace between Aon and insurers where you kind of seamlessly exchange data with carriers, can send risk information, can get quotes back, bind, etc.
Perfect. That's exactly it. But I think the piece of that all of that is absolutely correct. And I would say it's an and, which is the impact on our client. So what you described is the piece that Aon manages and the relationship between ourselves and our carriers. But it's pretty clunky. And it's not just Aon. This is like as an industry, I think we have not yet mastered kind of data collection from our clients. What does that look like? You and I were kind of joking about emails earlier and the number of them that we get on any one day. But this we send things out via email to clients. They fill out forms in different formats. They send it back in email. We take it, we rekey it into different systems. There's a friction in that, and candidly, probably time that could be better spent for our clients as well. Certainly, there's an accuracy issue if you've got people rekeying data both on client side and on the broking side of the business that we think we can clean up and create a better. Frankly, it'll make our brokers' lives a lot better, so it'll be a better colleague experience. But most importantly, it's a better value proposition for our clients. Right? They don't need that too. So it's exactly what you described, but I think it's a better flow of information
Yeah.
through the entire collaborative team.
I cannot agree more with that vision. And one question on that, because what would be typically the biggest challenge in deploying a marketplace is that you somehow need critical mass on both sides, right? So unless I mean, ideally all carriers are able to integrate with you that way through the marketplace, but that will be, I mean, that's probably going to take years, right? But also the other way around is like probably carriers also don't want to have to connect with 75 broker marketplaces, right? So have you given any thoughts on like, is this like the Aon marketplace, or are you thinking about creating more like a market-wide marketplace where there are other brokers and insurers?
I think that either one is possible. And I don't know that I have the answer for that yet. That is definitely kind of the fourth of the four horizons. I love the idea of an efficient marketplace that you just described. We're so far away from that right now. And I don't say that in a negative way, but what I mean is I think there's very meaningful, tangible steps we can take today that drive us much closer to the marketplace. And we'll get there in years. This isn't here's where we're going to be in 20 years. This is here's where we're going to be in 3-4 years. What I suspect will happen is that answer will come to us as the other steps evolve. And what I mean by that is what we think is going to happen now and where we're driving toward that vision will probably change, probably evolve. And you talked about having kind of some economies of scale, right? You've got to have some scale to get started. So some of the areas, just to make it very simple, in our first horizon is just around digitizing facilities that we already have. So let's just make our lives easier when it comes. Aon's got a facility called Aon Client Treaty. Another one is our global property facility. We can digitize that. Like this isn't even algorithms, AI, like let's all set all that aside for a minute. That's great to think about, but we need to digitize these facilities that have historically been fairly analog. And again, that creates faster turnaround time for our clients, better quoting ability on our part, much easier for our brokers. So it saves them time, saves them hassle. But just digitizing that is step one. And we've already done for the global property facility, that's already done and operationalized and up and running. So like in those first horizons, we can see some of the magic that's already happening for our clients and our colleagues.
And very briefly, because before we wrap up, what are the horizons 2 and 3? Are they defined already?
So I know you're familiar. Many have is kind of open market fast follow. So there are platforms providing that today. That's our second horizon, is getting that institutionalized and up and running. Then we have a similar idea, but lead open market. So that'll be kind of third horizon. And fourth horizon goes to where you started and kind of what we talked about as a vision, which is kind of the full marketplace.
Jillian, I have absolutely loved this conversation. I think it's been a fantastic balance between being really inspirational, very client focused, but at the same time with a lot of clarity around like what are the steps, the incremental steps to get there. So thank you so much for joining me today. I've really enjoyed the discussion.
Thank you. I have too. It's been a pleasure.